In a meeting held at Solent towards the end of 2018, the directors of HPCL have taken the decision to diversify. At present, company sells all finished goods from its own warehouse. The company issued debentures on 1/1/2019 and purchased fixed asset on the same day. When you read the sentence, you should understand you created both asset and liability on the same day. Correct? You issued debentures, that becomes a liability. Because of that, bank balance will go up, but you paid that money and purchased asset. So what happened after this event? FA went up, debenture went up. The purchase price have remained stable during the year. Following information is provided to you. Now see, entire P&L they have done 2 years, cash sale, credit sale, total sale, COGS, GP, day-to-day operating expenses, warehousing, transport, admin, selling, all related to regular business for both the years given to you. Balance sheet also, fixed asset, receivable, cash at bank, stock, current asset. They shifted current liability here, payable. So they did CA minus CL, working capital. Remember, morning we did one class note, FA plus CA minus CL is equal to proprietary fund plus long-term debt, if any. Remember, I shifted CL this side. That's what they have done. They shifted liability this side. Total asset represented by share capital, reserves, debenture. You can see there was no debenture in first year balance sheet, but that number is sitting in the second year balance sheet. All okay. Now you have 2 years P&L, 2 years balance sheet. You are required to calculate the following ratios for the year 2018 and 19. That means they want answer in this table, particulars 18, 19. Same ratio, two numbers. Yeah. GP ratio for 18, GP ratio for 19. That's how you have to understand. Operating expense, operating profit, capital turnover, stock turnover, net profit, receivable collection period. Ratio relating to capital employed should be based on the capital at the end of the year. So they said don't take average capital, take closing capital. Give the reason for change in ratio of 2 years. Assume opening stock is 40,000 for 2018. Sir, what about 2019 opening stock they did not give? Correct, simple. This is probably for the average inventory of both the years. Ignore taxes. Thank you. Now tell me my answer will have particulars and these seven ratio names and then 2018 calculation, 19 calculation. Okay. Listen first, 18 and 19 and the ratio that they want. Read first one, GP ratio. How to do? GP by sales into 100. Now in exam, they want you to show the workings here, formula here. Tell me now. Go to the answer. Sorry, go to the P&L. How much is GP divided by? Now, sir, cash sale or credit sale or total sale? Total sale 3 lakh into 100. Sorry, 21.33. Listen, 1 second. I did not ask you to do. You can do later. Understand from where to pick the date. Guys, this is duplication work. If you know which line item, then I don't need you also for this. Anybody can. Correct. Your talent is first year. If that is correct, second will be correct only. Second one, operating expense sales ratio. Easy to understand. Operating expense divided by sales into 100. Now, operating expense after that GP, they've given that warehousing and this and that a small list of 4 items. How much is that number? To be divided by 3 lakh into 100. More than the number in Calci. What is the meaning of this? Okay, you tell me your number first. Happy now? Okay, okay. 6 point. Now I want you to tell me the meaning. If this goes up next year, is it good, bad? Why is it bad? Because you're doing expenses by sales ratio. But if GP goes up, is it good? Uh, by the way, did you see last two, three lines of the question? They said give reasons. That means it is not just calculation. They want some story writing also. Yeah, same expression. Correct. They have said give not expression, comment. So you have to write if it is up, is it good, bad, or neutral. It can be same also. Same 20%, 20% possible. So that story rating we'll do later. First, you need to understand the meaning. Okay, which is the third thing they want. Operating profit ratio. In this question, net profit itself is operating profit because in the income statement there is nothing non-operating. You see that warehousing, transportation, all of this is day-to-day expense. If there was loss of stock by fire, interest on investment, morning I told you the lens card thing, profit on sale of mutual funds, then those things are to be taken out. Here this is nothing but net profit by sale, but since they have used the word operating profit, I will also write operating profit by how much is first year operating profit to be divided by 3 lakh into 100. Now tell me, a high number, is it a good indicator? Next year, if the number is high, is it a good indicator? You're calculating what ratio? Profit ratio. Has to be good only then. Correct? Oh, what next? Capital turnover ratio. What to write? Capital by turnover? Turnover by capital. Capital means capital employed, not share capital. I've told you many times. Correct? Hmm. Now, turnover means sales. Okay. To be divided by, how do I get capital employed? I have share capital and reserve in first year, share capital, debenture and reserve in next year. Those are searching where is share capital. Balance sheet, last three line items. Read. Add share capital plus reserve 1 lakh. So now see on screen 3 lakh by 1 lakh when you get, you'll get 3 times. Interpret what is the meaning of 3 times from 1 rupee of capital employed. We are generating 3 rupee turnover. If this goes next time, is it a good sign? So using our capital base, we are making more turnover. This reasoning you have to write whether something is good or bad. Okay. What next? Stock turnover ratio. Since I don't have enough space here, I'm continuing here. Fifth one, stock turnover ratio. Okay, what is the formula? Stock turnover ratio means inventory turnover ratio. What was the formula? Turnover first or COGS first? COGS divided by average inventory. Now you see last two lines of the question. They gave opening stock of 2000. That why did they give? So that you can do average. Am I correct? Tell me from the adjustment. How much is opening stock for first year? Go to the balance sheet. How much is closing stock first year? That means 40 plus 60 by 2. That will be average. Same way, second year. The first year closing becomes opening. Are you understanding? How much is opening of second year now? Plus 94 divided by 2. That will be average inventory. Now, where is COGS, sir? You know where is COGS. Sales is there, GP is there. In between, you have COGS. Doable? Hmm. Tell me finally for first year, what am I going to take? 2 lakh divided by. Average was 40 plus 60 by 2. Is it okay if I write like this for reference? 50. Then in Calci 236 by 50, 4.72. Now take time and answer. If this goes next year, is it a good thing or a bad thing? If inventory turnover ratio goes up in the next year, good thing or a bad thing? Why is it a good thing? If the number is high, that means it is moving fast. No, you can answer. If the number is high, is it good or a low number is good? High number indicates fast movement. No, don't go by my face expression. You may be right. My face is always like this. You know already. That won't give you any hint. You think and tell. Higher is better. Higher tells you more cycles in a year. More cycles when you do 365 by a bigger number. Then you will have less days. In inventory, less days means what? Inventory is coming and going very fast. I took the example of DMart saying 1 day. Remember all that? Hmm. Okay. They have not asked you days. So you can write only times and stop. But you should know high number is good number. Yeah. Okay. Next one is net profit to net worth ratio. Now name itself says net profit to net worth. So I will take net profit 15,000 divided by net worth. Net worth what all share capital plus reserve. So you'll take profit by share capital plus reserve into 100, 15%. If this goes up next year, is it good? So far questions were different. It was calculation. Now it's not calculation is easy. You have to think. You know what is next question? They have printed these ratios also. You have to only write whether it is good or bad. If this goes up, is it good? Your shareholders are earning more. Okay, next. Receivable collection period. They're talking about DTR, I think. Or first, if I have to do DTR, I need total sales or credit sale. Okay, did they give you credit sale, cash sale breakup? So you'll take the correct credit sale number to be divided by average data. Now, one problem. How to do average data? Opening plus closing by 2. Think and tell me. For first year, you have only closing debtors. No, no, no. 1 second. For first year, you have only closing with you. You don't have opening. For second year, you have both opening and closing. That means for first year, I can take only closing, but second year, I can take average. Is it a correct way? Answer is no. If you are comparing, both should be average to average or both should be closing to closing. In this case, I can do closing of both. It is wrong to compare one average and one closing and then write comment it is good or bad. If you have to check somebody's height, both should be standing on same place. One standing here, one standing here, and then you say very tall. Comparison base is wrong, correct? Following either both on average or both on closing. In this case, both should be on closing because both average is not possible. For that, they should have given one more information in question, like opening stock. They should have given opening debtors. They did not. So I have to go by closing data. Now I will wait in Calci do first year credit sale divided by first year closing debtors. As I hope you are doing now. 5.4 will be times then 365 divided by whatever DTR that you're getting, approximately 67 to 68 days. Happening. You should do later. I am doing rough workings. Credit sale by closing debtor will give you DTR. 365 by DTR will give you collection period. Are we done or we have one more? No, no. Table is done. Now tell me you will have how many numbers? 7 into 2, 14 numbers. Every number has a comparison to be done. And then all good things. We write it under the heading strength of the company. and whatever is not so good, we write it as these are the weakness of the company, and that's what they've asked you to comment. Commenting is anyway easy. No, commenting is not easy. Go to any YouTube live session. See there. Commenting is easy actually. Hmm. Anyway, let's start. You will solve now. Can I get GP ratio second year? 20. Okay, operating expense 06 or 08. 1 second. 1 second. 2 point. Okay, and 16 point. Around 87 to 88. This. Don't worry, 87.5 etc. But fine.